Hey guys, so today I want to talk about Disney stock, and one of the first things that I kind of want to point out here and that I've kind of been looking for within the last week, a time frame for Disney, is whether or not they would run up to their earnings report, which is coming this Thursday after hours here. Now, one of the main things that this is going to kind of reflect is whether or not people are bullish or bearish about what will be happening with Disney within the last 3 months and within the next 3 months potentially. So there are a lot of factors here that are going to be at play for this earnings report because of the fact that Disney is a company that operates many different industries here. Now, as a lot of you may know, and the reason why you probably clicked on this video is you've heard that their parks are reopened here in a lot of the US and maybe even internationally. They will be reopening these parks within the next few months here. Now, one of the main things that you have to be careful with is the fact that they had to shut down one of these parks in Orlando, or sorry, it might have been Orlando or LA after it was open. And what this kind of shows is that there's still a lot of fear that there could be a third wave or maybe even a fourth wave of the recent virus that we've been seeing here, and that's affecting our economy. Now, another thing with Disney is that they do own a large part in ESPN. And with ESPN being kind of shut down temporarily as a result of a lot of these sports not really playing, we see now baseball, basketball, NBA, and NFL all come back. And as a result, I think that ESPN will have a lot of upside to benefit from this and potentially Disney as a whole. So, one of the main things that we have to be watching here is not only what they report for this quarter and this last quarter, but what the CEO says will be happening in the future. If he comes out and he says, hey guys, just be careful because right now we're not doing too well, but ESPN's viewership is up 200% in the last week, then we will definitely be seeing a bounce on Disney stock coming into Friday here and right after the earnings. Now, you can see that in the last week, they've barely had any sort of bounce. They came down to 113, now they're at 117. However, these are levels that we've been testing over the last few months and in the long term. So, Disney isn't really doing anything special right now as a result of earnings. And what this kind of shows you is the fact that people think they're going to be doing really bad. You can see here that they're estimated to have negative 64 cents a share, which is obviously not good for any company, especially a company that has been reporting positive earnings and over the positive, sorry, no negative earnings for the last 6 7 quarters here. So that's one of the things that you really have to keep an eye out on, whether it's going to be coming down or whether they have a lot more upside left on them as a stock. You can see that they're not near all-time highs at all. And honestly, Disney being one of the bigger companies on the S&P and on the market as a whole, I would have expected them to be more around this 130 level here. Even though they did test it one time, they haven't been up back to this range. And I think that the stock is kind of expecting and waiting on earnings to kind of see whether or not they can rocket back to this 129 level here. So like I said, guys, just be very, very careful with this stock because they could tank. And if they do tank, I see them coming down only to around the 110, 112 level. I don't think they can retest on 100. However, if they do retest the 100, know that this is a very, very good opportunity to buy into Disney stock. Probably the best opportunity that we're going to be seeing here within the next few weeks to months time frame, as I do feel that Disney will start recovering after this earnings report. Now, like I said, there's a lot more to consider with this earnings report than only revenue and the earnings amount. There's a lot more in the respect that Disney could be saying, okay, well, we saw a 100% increase in viewers on ESPN and we saw a 500% increase in visitors to our park. Then a lot of people are going to be knowing that this stock will be increasing within the next few weeks to months, and this is going to make them potentially shoot up here. Now, a lot of you know that I love Earnings Whisper to kind of know what is going to be happening during an earnings report here. Earningswhisper.com. You can search up any ticker, any stock, and they will immediately tell you what they think is going to be happening here, where the resistance and support levels are in the short term, what's been happening with their price as far as analyst sentiments and earnings estimates, and you can see here what they expect their growth to be doing. And their expected quarterly earnings is down 132% here, guys. So this is not a company that you want to play earnings for. A lot of these companies like Apple or Microsoft, people think, okay, well, they can hit above their earnings expected, so let's buy into them. Disney is not one of these companies. They are not being able to produce any sort of revenue as a result of their parks being shut down. And as a result of a lot of their main business being hurt and crippled by this last economic crisis here, and the fact that people aren't able to go out and aren't able to visit these theme parks in the same way that they were able to around 3 to 4 months ago. So yeah, guys, just keep a close eye out. Additionally, you can see that the price sentiment is half and half here. Half people think it's going to go either down or stay the same, and the other half think it will increase. Now, there's no time frame set on this. However, like I said, in the short run, Disney stock will take a hit from this earnings report. I don't see them coming up over the 115, or sorry, the 120 as a result of this earnings, and I don't see them going below the 100 as a result of this earnings either. So kind of hedge your bets in that way. If you are doing options, any type of spreads, that's the kind of spread range that I would recommend. Now, I don't think you can guarantee a lot of profit on the put side as a result of that, but just keep a close eye out because there will be a lot of opportunity with Disney stock here, and a lot of people kind of thinking that their earnings will miss. Now you can see that their expectations, they're more than 50% think that they will either miss or hit right on the dot of what people are expecting. And again, this is not a good sign for the stock in the short run, and especially if you are buying into them as a result of this earnings here. So just be very, very careful. If you are invested for earnings, pull out right before the actual news comes out. Take advantage of the full run, but don't get in there when the ship is sinking. Don't stay in your trade just because you think you're earning money or you're up or you're making profit, that your account can take the loss, because you don't know how far a stock like Disney can potentially reach downwards if we do see this terrible news hit their stock. And what will probably hit their stock is terrible news. So just be very careful here, guys. Hedge your bets. Make sure you're always knowing what you're doing. If you are going to hold some stock into the play, into the actual earnings report, then make sure you have put call or put options to back you up in that situation. Make sure you are not in a naked position here, guys. Just be very, very careful. As always, don't forget to like and subscribe the video, and thanks for watching.